Alrighty, welcome to the blog for Monday the 13th of August. This is day 46 of 65 of the Compound Effect Challenge. Start of week 10 of the 13 weeks. The interesting thing about this Compound Effect Challenge, I found, I'm really trying to enforce some really great habits with trading, and obviously the goal is to stick to a method, apply it day in, day out, and be doing the exact same thing and just moving ahead with some great information, just moving ahead on my set goals at the end of a certain period, and to move ahead to really cement what I'm doing with trading. I applied it to a few other areas of my life as well. So what I found interesting is to create those habits, or to create that really good discipline. I'm doing some things in other areas such as health and wellness and things like that. So for example, I set myself a certain diet of only being able to eat certain things, and by applying that in other areas of my life, I find I'm doing really well in that sort of area as well, because it all relates back to my business and all back to my trading, and all I'm thinking about is creating these really good habits for trading. And so I find if I implement it across a few areas within the life, it kind of makes it a little bit of more of a sustained or group effort as far as I'm concerned. It's a really interesting concept, and it's all from the Compound Effect, the book. So here's the trading plan. So 3 major areas. Continuing trends. So there's a region that came up today around so what I'm looking for is a continuation of a trend. So I already got key areas in the market, so I just want to, for myself, go through and just really confirm each of these 3 strategies. So strategy 1, based around these key areas, and you can see that there was 3 within the vicinity today. Got 2 sort of setups: a continuation trade, much like a 5-minute buy if I'm at sell, or a 5-minute momentum, which is like a 5-minute fade trade. Now I actually had one down here, and I'll talk about it a bit later, but because it's close to lows, it switches to the next strategy, which is breaking the high and the low. So basically a continuation of the continuation trade. So I'm looking for that same sort of deal, but in respect to the highs and lows. I don't necessarily need key areas. So in this particular case there was a key level, but there's not a key level there. Flipping to the 1-minute chart, it's amazing, like 99 times out of 100 there's just such a significant area in the market, almost to the tick or two, that where the market's dealing around, and try to quite bring up that price or whatever I'm talking about in regards to highs and lows. And it's just, there's an area where it deals around, and then again I got my blueprint or what I'm looking for. Basically needs to use that area as, for example, if it's on the low downside, use it as resistance, push away for it, come back, use it as resistance, and go lower. So that's strategy 2. And then strategy 3 is what I call the pivot strategy, or basically meaning reversal, meaning that there's a significant area in the market. So this particular example, there's a reversal, so I'm looking for a buy here. So either reversal or directional. It was a bit of both really. I mean, I could almost merge the reversal and directional trades. They're pretty much always coming up in the same area, or within a tick or two of each other. They're based on very much the same concept. A trend you really need first of all. Most times, well, I guess that's where I keep the reversal, because sometimes the reversal can come in the first trend, whereas a directional will only come in a second or third trend. But it needs some sort of direction, and then the market looking to change that direction, and there's an obvious point in the market, like today 97 was an obvious area. Once it got above that, there was going to be a shift of pressure to the upside, and that's what I call a pivot. And I need some sort of significant pivotal area to base my reversal directional change trades on. Therefore it's the pivot strategy. And also I forgot, with the breakout, the breaking the highs and lows, also use it as a directional breakout as well. So this one here, I actually got a directional break today, so drawing a box round the pre-market data. So you can see today, so getting on to today, 1, 2, 3, 4, 5, 6.5 point range. That's quite a wide range. Normally I have something a little bit narrow, and it's easy to kind of see the market, and it almost gives it some parameters that it's knocking around in between. But as soon as it gets outside of one of these edges, either to the downside or the upside, with conviction, so the other market's going with it and with some power, and that's the direction I'll look to go for and use it as, in this case, resistance, or if it goes up above, using it as support. So today the market pushed through, came back, used it as resistance, pushed lower. I actually took a break-even trade. It went, and I was keeping an eye on this 96 level. So because there is a key level, I'm sitting there thinking, I really don't want to go to break even earlier. I've got to stick tight to my rules and sort of make sure I do what I say, what I preach, so to speak. But with that key level and bouncing off it, and then all of a sudden this pressure to the upside, did decide that I didn't want to risk anything on it basically because of that key level, and as a result went for break even. So nothing made there. Unfortunately, it did go the 10 ticks, the full 10 ticks eventually, but it's a decision I made, and at the time I was happy with it based on a key area. If apart from anything else, if it was just getting some sort of bounce and there's no sort of level there, I wouldn't want to be going to break even. I just got to let the trade go, sit in my hands, and let it be. At the end of the day, it doesn't matter whether it's a winner or a loser. It's the model doing the work. But this particular case, I have a rule that with key levels, they can have an influence on me going to break even earlier. They don't necessarily stop me from taking the trade, as in key levels with this particular trade and with my reversal trades, but they can have an influence on me going to break even earlier. So that was the first trade of the day, and it ended up being break even. As I go on, you can see, I may have mentioned before, so there's 3 key areas today, or 2 of them that the market was around. 96 is the significant one. It's just probably the most significant area in the market at the moment. Just the market keeps on reacting to it. You can see it's bounced off it here. It just about bounced off it there. As soon as we got above it here, there was a real indication that I was really keen on the upside. As far as this 99 level, you can see we bounced off it, right at the start of the day. This level is already predetermined, so it's not like I drew it in once we bounced there. It was already bouncing off there, and then right at the end of the day, bounced off it to the tick as well. As far as trades, there was 2 trades for the day, and 5 setups, 5 potential setups, I should say. Some didn't fill, and some I didn't like, or didn't. Sorry, they were setting up. It's not like it's whether I like them or not. It's whether they meet all the criteria to get into a trade. I should correct myself there. So 3 of them were potentials, and 2 of them actual trades. So like I said, this break even. Directional breakout on the downside didn't work. Another area we could take it is 99's key level 2. So once it gets under 99, which it did here, uses resistance to push lower. Okay, a bit like a 5-minute fade, or what I call my 5-minute momentum trade. But I don't take them on the first trend. Like I said before, it is something I'll look at. For now, I don't think there's a need to. There's enough to watch, but I do find these work quite well. Sort of the 5-minute momentum on the first trend of the day. So anyway, I keep an eye on it, keep making reference to it, but not actually trading it yet. It's not in the trading plan. But then, as far as taking that same concept on and using the breakout box, yes, that's definitely a trade setup for me. Then, so what's happened around here, as far as this dealing around this key level here, so there's a couple of areas I'm looking at. It's either one of my 5-minute continuations, or what I'll use as my 5-minute sell trade. So rather than just waiting for the market to pull back and then predictive cross down, I base it on an actual area in the market, and that's 96. Okay, so if you imagine this market pushed down further, then popped up, what I'll be looking at is a continuation trade and looking to sell. Because this line is within 2 points of the low, okay, it now switches over to a break low or break high trade, so breaking the lows trade. So for that reason, I use other markets as an influence. When we're close to the highs and lows, I use other markets. When we're just dealing around key levels, it's just a continuation or momentum trade, I don't use other markets. I just purely want to keep it simple. I just use the levels purely for what they are, and use my blueprint to apply it over the top of those key levels. I hope that makes sense. Okay, so if it's a continuation momentum trade and it's not too close to the highs or lows, I'm just purely looking at the level, nothing else. Nothing else influences me. But if it's getting towards those lows, and obviously that's where the market starts to get a bit volatile and choppy, then I do want to incorporate a little bit more help, and I use the other markets. It's all clearly defined in my trading plan. So for this particular one, basically the setup is, and I'll switch over to the 1-minute chart. Here we are. So we pull down. As soon as we pull back and the predictive starts crossing up, indicating that we're having a little bit of pullback, if I get some sort of blueprint over my key level on the downside, I'm going to take a sell. So here's the level, and you can see the market's just dealing. This was a predetermined key level, but even if that wasn't there, this would be the price action, or the immediate price action. Anyway, the market keeps dealing around this price. So basically, it's popped up, it's pushed down. So what I need to do is push through, and so show power through that area, but at least 4 ticks. Come back, use as resistance, and then sell. So if I was actually taking this 5-minute sell, I would have sold here, and it eventually would have been stopped out. But the key area, or area that I include with this, is other markets, and I must have the support of the other markets. So all other markets must look like this or better. Okay, I've got clearly defined in my trading plan as well as to exactly what I'm looking for as far as market support. In this particular case, there wasn't market support, especially the Nasdaq. If you look at the Nasdaq, it was well and truly up a lot higher and was pushing through on the upside and wasn't hanging around its lows and putting pressure on its lows. So for that reason, left, and this is what this arrow here left the break low trade, and as a result of that, that's automatically starting to get me to think reversal. So when I see a key area fail, so reversal means basically a key selling area or buying area fail, as in a 5. So this particular case, a 5-minute sell or a 5-minute break low trade. So any sort of significant selling trade that that should not necessarily should work, but it can see it's an obvious selling, or what seems like an obvious selling area, and when this predictive average crossed down like that, that becomes an obvious selling area. So not taking the low or break of the low trades because of didn't meet all the criteria, but automatically had now this 97 level in place as my pivot, and if the market breaks through that pivot with other markets pushing through, then I take the trade and just buy anywhere from a couple of ticks before to 1 tick above. Now depending on what the other market's doing, at worst I buy 1 tick above the level and look for it to push through. Any of the entries today would have worked, but I actually bought at 96.50. As this market pushed up here, the ES just popped back a bit. If you look at this exact point here, the Russell and the Nasdaq were just screaming through this area. They were pushing up with some real power, and the Russell quickly got well and truly up above that area, so it became quite obvious to buy. And the only time I'd buy earlier, if I can say to myself, I can almost guarantee that the ES is going to break through and go at least 1 tick higher than this level, and then I'm prepared to go in a couple of ticks earlier. And with all the other markets just pushing through with a massive amount of momentum to the upside, I'm more than happy just to, wherever the price was, just buy then and there, and that was a couple of ticks before the actual breakout area or the reversal area. So I bought it in at 96.50. Obviously then the market's pushed up higher, hasn't quite got 8 ticks yet, which is probably a good thing because it would have came back and been a break-even trade otherwise. It went 7 ticks. So this particular one here, I'll explain my exits once I finish explaining the trade, but basically we popped up, we've come back. Now obviously this is the 5-minute fade which came up with, which the room took. Another area which I've also marked here is my 5-minute fade, so I'm looking for it to push through. Moving average is pointing the upside. Rather than me waiting for the predictive average to cross over, I'm waiting for it to hit my key level. So you can see it came 1 tick short of a momentum or my 5-minute fade trade. Now obviously I wouldn't have bought again because I was already in the trade, but I still record it for my personal information and data. But as a result, there was no fill here by 1 tick, so I'll actually record that. Anytime I get a trade set up and it works and comes within a tick or flashes on the order, I record it. Obviously if it's going to push straight through, it's always going to be recorded because it's going to be a stop out, but if it comes within a tick or so, or right on the order, I want to record that too, and if I start noticing I'm missing a lot of trades, then I need to do something about that. So that was my 5-minute momentum or 5-minute fade version right there, which just missed. So this reversal actually got out at 3 levels. What I'm doing now is 9 out of my 10 trades, I suppose I'm taking 5 ticks, so taking 1R out of the trade. Overall for now that it will reduce my expectancy a little bit, my average winning trades. I know that for a fact, but it also gets me to break even trades on all my trades a lot quicker, because basically as soon as I take out 5 ticks on a third of my contracts, I reduce my stop automatically to 4 ticks, so then at worst case it comes back and the remaining contracts get stopped out for 4 ticks, and averages out to be about a 1 tick loss, which is nearly a break even trade. So I know that the market has to go 5 ticks and boom, I'm almost at that break even level. Now it's something I'm doing for now. I'll keep on recording all the information and seeing what's working best for me. As a result then the trade needs to go a lot further for me to average out my 10 ticks, but that's something I'm willing to do for now. So 5 ticks, then I took out 10 ticks, and then I had 14 ticks, so I got out here. Actually had a level set for 14.01 originally, then extended to 14.02, which both originally got to, but when the market started pulling back, I brought my profit target up, and eventually I was out 14 ticks, so it averaged out to be about a 10 tick trade. But that's the way I'm approaching it, as we're talking about at the moment. Exits is everything to do with trading, and it's certainly something to focus on, have a specific plan for it. So the market's popped back here, just missed bouncing off this level here, so again it's respecting this level, getting support off it, pushing up, pushing higher. From there we've got all the way back to the highs. The market's bounced off this key level here again and pushed higher. So what happened with this? This is a 5-minute momentum trade, again like a 5-minute fade. Moving average is pointing up, predictive crosses back. You can see now, but the market's very extended. It's basically the second pullback. So as far as a 5-minute fade's concerned, it's way too late. So that's same with me. As soon as this moving average gets above this blue, meaning the trend's getting now a little bit extended, I switch. I keep the same sort of concept in place, but I need what I call a confirmation entry, which is a little bit different. Basically needs to push off it, come back again, and almost test it a second time, just because I'm not so much relying on this level holding as solid as it would earlier on. Just my way of still giving myself an opportunity to get on this trade. So it's just flashed on the level, but I haven't got a confirmation entry there, so no trade. So just the one winner in the break-in for the day. That's blog for Monday, back Tuesday.